Hello everyone. Please contact Tutor Cillamac for a sample or a customized plagiarism-free paper for the following assignment. WhatsApp +254716353533. Bafi 1065, Money Market and Fixed Income Statement. Weighting, E50%. Due, Friday the 27th of October, 2023. Assessment 3. Part 1, Dealing Simulation A, report and examine the composition of your portfolio in terms of market value and face value. Evaluate the trading strategy implemented and the performance of the portfolio. What is the level of interest rate risk in your portfolio? Assess the degree of interest rate risk associated with the holdings in the portfolio, and provide a detailed discussion of the insights derived from this analysis. B. How has the interest rate risk profile of the portfolio changed? What are the implications for the portfolio in the context of the current yield curve environment? C. Comment on whether you achieved your set objectives about interest rate risk. Identify the trading actions or strategies that contributed to your success if the objectives were met. If you did not achieve the objective, what would you do differently? If the objective is achieved, what will you do next? Is any issue relevant to this trading simulation activity but beyond your control? Discuss the responsibility of each team member and collaboration strategies. Part 2. Portfolio analysis. Each student is assigned a collection of 5 Australian government or corporate bonds and a bond index. Refer to the Excel file, Australian Corporate Bond List, public_2023s2.pdf, for the chosen bonds and indices. A. Based on a set of 5 government, corporate bonds and the benchmark index, calculate the annualized tracking error of the portfolio, i.e., when you answer this question, get the monthly or daily returns of 1 year. B. Suppose you aim to align with the benchmark index without changing the existing elements of your portfolio. What steps would you take? Answer the same question if you want to change the portfolio components. C. Review the usefulness of the tracking error method with a comprehensive reference to the relevant academic literature. Comment on the pros and cons of using this method. Discuss how you have estimated in Part 2, A, and B, and connect the literature to your case study. D. Suppose your company has a liability payable that would like to match the duration measured by the portfolio. Answer the following questions. This liability is due in 6 years, the basement date is the 30th of June, 2023. Calculate the Macaulay duration of the portfolio based on the weights assigned from the Excel file. Does the portfolio match the liability? If not, how to change the portfolio weight to match this liability? What would you do if you would like to rebalance the portfolio by using other bonds? Discuss and elaborate on the immunization method using the bond list provided in the Excel file. Comment on the pros and cons of using this method and use this real case to link the literature. Based on the literature, compare and contrast the cash flow matching and duration matching methods. E. Answer the following questions to analyze the credit quality of the portfolio. Use traditional ratio analysis, i.e., interest coverage, leverage, cash flow, net assets, and working capital, to evaluate the bond's financial risk. Evaluate the bond's overall credit quality. Comment on the portfolio credit quality based on those bonds. Are there other ratios to consider when evaluating the bond credit rating? Discuss the pros and cons of using ratio analysis.